Hello, yeah, welcome to the second edition of short-term trading with Ambrose Investdata Trading Academy. Here today, we're looking at the market performance as at noon. You can see that the market has already given us a sign of correction already, and this is what we call in technical analysis change of trend. You can see that for almost for 3 days now, this we're looking at a live daily chart. You can see that for 3 days now, you can see that the market has been looking down. I see that, but only that the pullback has been no so little, not marginally as I say, but not giving us a full direction. But I believe at the end of today's trading, we should get the full G. But I will tell you what we are seeing is a pullback, a correction, and this is expected after the market have rallied for a straight 6 weeks. And I'm not surprised that we are seeing this at this moment in the market. But the good thing is that investors should not panic, while traders should not soon panic. But rather, it's an advantage for you to what to take profit in the market and come back again, knowing that this market goes up and down, and the factors that brought the market to this level as we speak are very, very intact. And because they are intact, you don't need to panic. But before I go further, I want to give you the state of the market as at this time. As we speak now, market is losing 144.2.87. That is about 0.29 or 28 approximately. And it tells you that market for Friday was down. Yesterday market was down. As at midday on a daily chart, we also see market looking down. But this do not panic anybody, as I said earlier. And also, as I speak now, the top traders for the day is GT Code, Transcorp, Fidelity, Zenith Bank, and UBA. I ask yourself, why is it that it's the banks that are dominating the top trade recently? I will tell you, you don't need to go far to look for the answer. Because most of these banks, dividend yield as to speak, are still impressive after the market have broken out 47,000 index mark. And that tells you that the rally we have seen is not for general market, it's just for few stocks that have carried the market to that level. And because those high cap stocks are the ones also pulling back, are the ones also losing, that's why we're seeing correction. But for these banking stocks, I will tell you, they are still undervalued and they are heading towards where they are going. And they will not stop until you see their result. That tells you that investors that are looking for high dividend yield are positioning in this stock. That's why you are seeing volume in them. But despite that the volume for this afternoon is not much, but I'll tell you that we are seeing transaction more on the banking stocks. Now, to speak also, the top gainers out of the general market, as we speak now, only just top 4 stocks are on the top gainers. The market is really on a red day, because I'll tell you, we have about 14 stocks that have declined, in price, and those stocks were topped by, Cavaton losing 5.3, Royal Exchange losing 4.8, Unilever, and the big one, Dango Boa Food losing 4.00%, then followed by Police Microfinance. And you know that all these stocks, Police Microfinance have given us an unaudited account that was impressive, and a rally to around 2 naira 20 kobo. Pulling back now for me, I'm not surprised, because the earnings have given us inside that we're likely to pay good dividend. For that, you don't need to panic for that. But for Boa Food, yes, it's bad to correct. You know how this stock was listed at 40 naira, a rally as high as where it is before pullback is normal, and it tells you that the market is really heavy. Then also, if you look at Unilever, among the top losers this afternoon, losing 4. But for me, it's just profit taking in Unilever, and also for Cavaton, it's purely reaction to a negative result that were released from Cavaton. For me, let's just look at that and hold our breath. And so, if you look at the top gainers, as I said, just only 4 of them. There are Name Insurance, Owando this morning was even losing initially, but that's close to also the gainer start, gaining 5.3 to trade around 5 naira, 5 or 502. And also ICO and International Brewery. These are the 4 gainers as we speak as at noon. But the good thing is that I will tell you that this market is still very, very interesting, and you don't need to panic. Yes, we will say that volatility is associated with any season, which I make you know before now. But volatility is increasing in this period, of the market at this season now, because we're expecting the corporate action of this company to start hitting the market any moment from now. Because we're expecting that corporate action, already markets are adjusting to see what will come from these companies. But the good thing is that we have seen companies that give us insight what we should do concerning what the earning season now. Especially, we have seen companies that have released their numbers. We know where they are going with their numbers, especially their earning per share as at their full year unaudited account. But the good thing is that despite that the market is on this volatility, I will tell you that the volatility we are seeing today in the market as at today, I'll tell you it's still less than what we saw in 2020 and 2021. Why? Because as at that period, the month of February was already bleeding in these 2 years. Go and check it. And but now we are seeing a lot of just little volatility. But also don't forget that any season is very interesting when trading it because it comes every quarter and every and yearly. And you as a trader or investor, you know that at this season there are a lot of activities that are associated with any season. That is where you see liquidity coming to the market, which we are going to check as we go on this discussion. And also if you look at also that is the time you see a lot of big momentums. I also look at also see sentiment, but you also see fund entering the market because of this volatility of company result, it pay dividend, bad earnings, you see market react to it. That's why you see this volatility in the market. But as we speak now, because the market have crossed as high as 47,000, many people think that the market is on overpriced or on at overbought. But I will tell you, not all of the stocks on the exchange are in that region, but the few stocks that have taken the market level are the ones that to correct. When I mean those ones are the Steplat, Excel, MTN, and what Nestle. These are the big names, and the Dangote Cement. These are the ones that brought the market to this level. But now they are correcting. You can see that Dangote Cement is slipping now, does not make any move. I believe that once they finish their board meeting and they announce the result, that also will trigger. We have seen what came from MTN. We also have seen the third quarter earnings of Airtel. We have seen the unaudited account of Teplat, and also as oil price remain above $92 as at this morning, also it's a plus for Teplat and all the oil industry for the energy market. But for me, that the good thing that this earning season is quarterly and yearly, and as an investor, you can also look at what to do in this season because it gives you an insight that this period there are bound to be what volatility and bound to be what a lot of activity in the market. That is why, like I said, it comes quarterly and yearly, and because it comes quarterly and yearly, you don't need to panic yourself or fidget at all. But rather, all you don't need to do is for you to just take gradual process and invest what wisely. Invest what wisely. As you're investing wisely, you are making the right decision at that particular time. That means you don't need to rush. That's why I said the factors that brought the market to this level are still very, very much intact. And if they're intact, you don't need to panic at all. I believe that these corporate earnings that are coming are from this month also kind of trigger, another direction. Because the market for me now, you can see that. Let me quickly bring the moving average as we used yesterday that tells you where the market is. I'll bring the shortest moving average, that is the 9 days moving average, so that you can understand what I'm saying quickly. We show you that where the market is now. If the market is at that level, you will know what to do at the particular time. Even as you see now, at the 9 days moving average, the market is still high. You can see this blue line here. That's that the market is still high. It has not even touched the 9 days moving average. That means market is still trading above 20 days, 50 days, and 200 days moving average. I know that every institutional investor they watch the 50 days moving average. If the market is correcting and 60 days average, I'll tell you at that time, so the market, you can see that this institutional investor will start selling other position. But market is still high because they have taken position in most of their stocks, and that's why they are waiting. And most of the stocks they are taking position is those dividend paying stock that they are settled and they are waiting. And I'll tell you, if you look at the report that came as at December, you see that most of the PFAs are already more in equity position because they know that the fixed income market and at the same time the treasury bill are not too attractive for them because of the low return. They are already in stock waiting for this dividend to catch on this dividend. And now they have seen the first quarter, the unaudited account and so quarterly result that came in January. They know what they are doing. That's why they are still calm in the market, just waiting to see the top. But you as also individual or retail investor, you need to watch their movement because you see volume moving, where the volume entering, where volume is leaving, where fund is leaving. You should know exactly what to do. And that is why we are here to always share our thoughts together so that we will know what to do per time. It's very, very important. When volatility is high, and you know that at that particular time, they are bound to be what we call kind of earnings that say that stocks are overpriced because they have run or but as I've said earlier, our market is still not overbought or overbought or what we call overpriced. But just because they have gone up because of the what the high cap stock, most of the companies are still undervalued. That means they are still attractive as we speak now. That is why if you look at the market, general, PE ratio, and I mean market general is around the 7.05x. That tells you that it's still at a good rate. Anything you see that is below 12 times, it tells that it's not a bad one. When it's above 15 and above, you can be thinking of overpriced and above. I'll tell you the market is still very underpriced and tell you that we still have potential for upside move. For me, we don't need to panic. And also, if you look at the general market, also the general market average dividend yield is around 5.82. It's also in order, and this is above all the the tenors in Treasury bill, and that is that the PFAs, they pay more safe where there's less risk. Agree, but also they want to make money for their account holders. They would like also to make investment in equity where they can get good return. Also, if you look at those PFA that were ranked the best performing PFA in just 2021, I'll tell you most of those top ones are those that are playing equity seriously, and you can see their performance. While those that are trying to take less risk, you can see that they are not among the top gainers. It tells you that a good PFA will want to balance the portfolio so that it can also make impact on the account of his client that is managing. For me, we'll see that this earning season between now and April might see a little oscillation, but prices might hit new highs, but not as such. But you as an investor, that a trader that enter earlier, always know when to go out because your profit target should always guide you. Don't because the market is gyrating, you want to become greedy. Once it hits your profit target, also you want to come out from this position. And also when market is becoming volatile as we are seeing now, it's time to tell you that the market is risky. And it tells you that this is the time you should apply your stop loss seriously. No, not just doing a eye service or doing just guesswork. Is that no, unless you are not a trader. If you're a trader, your stop loss become your key instrument that you use now. So that once you touch your stop loss, you sell up so that you have fun to enter another stuff because anywhere there is volatility, there is always risk associated with it. For that, you need to always balance your decision. That is why stop loss is here. This is the time that you should take away emotion from your investment decision, no matter what it is. You are there to make money, especially if you're a trader. But if you're an investor that are waiting for dividend, there's nothing stop you by waiting to see because especially they have not declared the numbers that will from there they pay dividend. You have seen the unaudited until they come with the audited account, dividend will not be paid. But once the dividend they will announce it, then you have to wait. But for traders, once you see that your thing has touched your stop loss, you can sell off immediately and move. But also, like I always say, that nothing stop you as a trader to have two portfolio, one for long term and one for what for trading. So that like now we are doing live scratch chart here using a daily time frame or a day chart. If you are trading live, when the market go against you on a daily chart like this, what you do, you extend your waiting for a week. Then also when you are using a weekly chart to trade, and also your position market go against you on a weekly chart, you also have the liberty also to adjust your waiting for what for a month. But once also you are doing a monthly, that means you can look for like a quarter to come out. That's why if when you are trading like this, it's good to always look at what is happening. Once you know, you can see that if you look at the market now on a weekly chart, already live chart on a weekly, you can see that it's just like it's still flat. Tells that we are still having a long bullish candle with just little bearish sign here. Tells that on a weekly chart the market is still strong. Even on a weekly chart the market is above what the 9 days moving average. That tells you that there's no cause for alarm in the market because all the factors that spread the market to this level are still very, very much intact. That means what you just do that you have to look at what you are in for. For you can see that we are gradually seeing activities for the week. Yesterday was Monday, today you can see. But when you go back to your daily chart, it give you more information. If you want to do 1 hour chart, yes, as I tell you that the market is changing. Yes, on the 1 hour chart, you can see that even the market is trying to trying to slow down here. That means trying to resist decline. You can see it here. But also see on the 1 hour chart, we have to be also look at the market has broken down the what the 9 days moving average. It tells you that like I said earlier, there's a change of what? A change of trend. But a change of trend, you have to look at is there change of characteristics in the market? There's no change of characteristics in the market, there's only change of trend. And what is as a result of what? The profit booking, which is also lingering for getting to 3 days now, which I know before, at the end of midday, where we are thinking of the option of the treasury bill option that we're holding tomorrow, That will also give more strength to the market depending on the outcome of the option. About 90 billion is being offered. Let's see how it goes. Once it will also come out positively, the rates also decline further, we might see also a more fund flowing into the equity market. Just quick one, we want to look at what is happening in terms of money flow into these positions. Let's check our money flow indicator to tell us what is happening really in terms of fund entering the market as speak now. Because I'm telling you, as tomorrow is another activities for money market instrument where there will be primary market option. Want to see the level of fund that is flowing to the market. That will also give us a clue of what we are supposed to see, at the end of the day. There you can see here now that can see here that funds is still on a, even when the market is trying to adjust. Even also there's a sign on a hourly chart that the market is trying to resist a decline here. Because we can just see little sign here. But we can see that fund, if you look at this chart, what we call the money flow chart, the straight line, you can see also it's already looking up around the 40, 37, around 37, 41, which is also good. Looking up, it's not looking down. So despite the market is adjusting down, we can see the sign of fund entering the market. But the good thing is that we want to go to that daily chart now to confirm exactly what the fund is doing. But on a daily chart, you can see that yes, the funds is also leaving the market. You can see how to marry it as a trader. But you can see here that on the hourly chart, we saw that the market has broken down the 90 days, the 9 days moving average, sorry. And now on a daily chart, it still tells you that the market is still strong. That's why I say if you are trading on hourly chart, once you miss your position on hourly, you can extend to see what happened for the whole day. Then when you are missing it for one day, you have to look for what for a week. When you miss it, but why all this kind of flexibility is for you to not just jump and tomorrow the stocks are going up, but once your stop loss is guiding you, don't allow anything sentiment or emotion to also keep you in a position that have touched your stop loss, because that stop loss is to guide you so that you won't lose your capital. That's why, because I'm telling you, even when the market starts bouncing up to today or tomorrow and you don't have capital to play, you just be hearing market is rallying while you are not participating. That's why it's very important that you will use your stop loss at any time. It's very, very key. That stop loss will guide you to what to do at that time. Yes, as we have seen the state of the market now, we want to look at the stocks that are on the top gainers to see how they are performing and what the chart is saying about the stocks, so that we also know what to do immediately as investor in this position. Let's quickly stop with the top trades. The top trades you are seeing here is more of the banking stock, as I said earlier. GTB, Transcorp, Fidelity, Zenith Bank, and UBA. We want to quickly look at the chart for GTB, then we'll look for that of Transcorp and that of Fidelity, Zenith Bank before you can look at it, so that you will know exactly what the market is doing. But this is a live market. What is happening in the market is one of course. This we're looking at a day chart now. Then once we come back, let's quickly look at this. Let's look at the banking stocks. Let's start with Zenith Bank. Let's look at Zenith Bank. What is it doing today? Let's see what Zenith Bank is doing today. See what Zenith Bank is doing today. Look at what Zenith Bank is doing today. This Zenith Bank charts now. You can see for yourself here. This also a day chart. You can see that we almost this not to we say this a bearish engulfing. Still the bull candlestick here, which is also longer than the bull. We will say this a bearish engulfing candle, but still not a bearish candle because this one is still longer. But you can see that there's a pullback here on the price of Zenith Bank. For today, you can see that the price have adjusted down, trading around the around the 26.45. You can see what the price is as we speak now. But the good thing is that I will tell you that these stocks, that's what we'll do. What I want to do now, that will guide you that you should not panic until there is a breakout of this level. That is where panic can come to anybody that's in Zenith Bank. Let me just draw this. What we call that we call it a channel or straight line. But let me just draw it here. Sorry. We need to cover this points. Yeah. Then you come back here again. Okay. Now come here again. Can pick it from another top here. See this top here. Stop. Can now draw this top here. Down. Now I can see. That. You can see what we call here. This what we call this what we call a bullish channel. Bullish channel in the place that is looking up, is trending up, not looking down. Because it's not looking down, it tells you that it's the price action of Zenith Bank is still within the what the channel. That is it. We brings to that Zenith Bank is not doing badly. But you can see that here a breakout of the channel. That is when it touched around the 27 and came down, but still trading within the channel. But when you go, the panic will come that Zenith Bank break out this first support level at this point. Let me just give this, draw a line here. This is the first support line. You will be panicking that when here is the first support level for Zenith Bank. Once you break out this one first, then you break out this one, then and break out this channel, they will not say he has confirmed a real bear situation. But still, as the channel is looking up and the stock is trending high, for me, correction is about to happen in any market or any stock, and that is what we're seeing. But once Zenith Bank results come, and also don't forget that there's a tradition that's there with Zenith Bank when they lose the result, but it also depends on their payout and the liquidity in the market. I said earlier that most of the PFAs are already taking position in most of these stocks, which I know that also when they see the result, they can also increase their stake, depending on the outcome of this tomorrow, the tomorrow what we call a national treasury bill option, primary option. If the rate further also decline, I'll tell you, you see more funds entering the market. The good thing I'll tell you, Zenith Bank is in the right position. Nobody should also panic at this time if you're already in Zenith Bank, but rather hold your position dearly in Zenith Bank. But that is where I see also value in the stock. Also, let's quickly look at the GTB here also to say, okay, let's before we go to GTB, let me look at the money flow for this money flow for Zenith Bank, because it's very key. You need to know, because if fund as a pullback, want to know the rate at which fund is leaving Zenith Bank at this point. If it's just for profit taking, but if there is the fund is on the other side, we can also ask ourselves, oh good. I'll tell you that the fund that's in the Zenith Bank is still strong around the 50, almost 50 is still strong, but only that is slowing down, looking down on a daily chart. Let's look at the market position. Even on hourly, yes, still there, still looking up gradually up. You need to use all this to guide you so that you won't jump out a position and you see that the next day it does turn up, or before the market close turn up. You need to know what is fund entering the stock, is there plan to, and also if you see on a hourly chart, you see this chart formation here. So that also Zenith Bank has also resisted to decline further. You see this Odoji candlestick here. You have to look at it. I tell you that the major support level that you have to watch out on Zenith Bank is when it break out this around 26.15 down. That is where you think of panicking. But as far as already still around that level of 26.60, I will tell you that you still 50. You need to also hold your breath. There is no cause for alarm at all. I tell you, the market is waiting for a trigger, and this trigger will come from of what corporate action. And when it comes, it will change the face of the market. That means, as an investor, keep your gaze on this number. And when they come, don't forget that this number was to attract more investors to the market, especially those that are sitting on the fence to see the numbers, what they are declaring. And also don't forget that when they declare this in the what we call earnings trading, that people that want to enter this store, once they make money, they move to the next one, just trying to shuffle their portfolio and move around the market. That's why the volatility during any season is always high. This is bound to also repeat itself as we start seeing corporate action. I said it earlier that this month we'll see those big names that will release their number, but probably they don't release their number during the first month of the year, because ideally they have given them two options. If you want to release your unaudited account for the full year or the last quarter within 30 days, fine. You can now extend your audited to 90 days. That is around there before end of 31st of March. But many of them that are big names, I'll tell you, do not opting for the reading unaudited. They are opting for reading audited within 60 days. If that come to be, we expect that before this week runs out, or next time, we're also expecting economic news by next week, looking at the consumer price index for the month of January. What to look at, what all these figures, all this data will give us, and that also from information to hope. And don't forget that I said it yesterday on this platform, that as far the other climates where we're seeing some geopolitical unrest, that also going to trigger the price of oil. You can see where oil is going, and many analysts in that market are forecast that oil is likely to hit $100. If that come to be, it's also going to be additional fundamental that will support our economy and also at the market as we speak now. Let's quickly go to GTB for our time is spent. Let's go to GTB to see the performance in GTB. That will also guide us to see what how the market is going. Because it's very important to get it right. Once you get it right in your position, you are not too front and back by the market direction, because you know exactly what you are doing in the market. That's why knowledge investing is key at any market you are playing. And also don't forget that there is risk element in every market you are playing, either you are playing gold, you are playing commodity, you are playing stock, there's element of risk. That is why you need to at all time up your game in terms of knowledge in the market, technical and fundamental wise, so that you can take informed investment decision at any time. And once you do that, you see you will manage your risk. Also you boost your portfolio in terms of profit. Yes, you can see that GTB is on the green again. As I said, market GTB has turned green already. What we need to do here now, I want to look at the chart of GTB, look at the chart to see what is doing rightly now. Once we're able to confirm the position of GTB as we speak, it will give us a clear direction. Yes, you can also equally see where GTB is as we speak now. This is stock that have even traded down before adjusting up to be in the green as I speak now. Then let's quickly also look at GTB on the hourly chart. And GTB, you can see that the volume here, GTB is really strong on hourly chart. You can see, and also GTB has formed what I call that's what we call this in technical analysis, a symmetric triangle. When you see a company doing that, when you break out that height, it tells that the company is going high. When you draw a line here, you can see what the stock is doing already. To go a long way to tell you where the stock is going. And you can see that the stock is even resisting to go further down. It's a good thing for me that we are seeing this in GTB. You can see line between either a breakout up or breakout down. For me, you can see that you haven't break down the line, but this say it retraces up to, and even up for for me, GTB is very, very strong, and you can see that on the hourly chart you can see good volume in that stock now. That's why it's topping the trade for the day. You see there's a volume supporting GTB movement, and you know that GTB in terms of dividend yield is around 10.5 12, while that of Zenith Bank is around 10.55, and Access Bank around the 6.56. For me, the banking stocks are really looking good, and UBA is also not doing bad. But because of time, we might not go into UBA. That means in our next discussion, we're looking at other sector and other individual stock. But I'll tell you, the market is still not friendly because of what the correction is having of profit taking. But that should not send any form of panic to the market, because market is still healthy. A market that is trading above 9 days moving average on on a day chart, tell me it's very strong. It's only on the hourly chart I see the market breaking down, and you know that this is what we call intraday trading. But on a daily chart, the market is still strong. On a weekly chart, market is still strong. That means there's no cause for us. We should not panic at all. That means we look forward for tomorrow guide. I'll tell you, there's no cause for alarm in the market. The market is still strong, and I expect more results to come. Which I know that as from next week we'll see more, because most of the companies will meet this week, and as they meet and they approve their result, those are not sending it to CPN again, and those that have sent to BTN already, we expect that they also announce their own any moment from now. That will change the face of the market. That means any position you are taking, just put your position and watch the market. The market is still very well strong and bullish. Thank you, and enjoy the rest of your day.